I'd like to start with the markets right now. Obviously, the S&P 500 has been defying what some say would say is logic. Record high again overnight, but the bond route has indicated that we have some turbulence, some swirling tide pools under that record high. How are you reading the markets right now?
Well, I think their animal spirits have come out in the equity markets and fueled by two things. One, the anticipated IPO prices of OpenAI, of SpaceX, and of Anthropic. I think people are anticipating those will have very high valuations, and that will fuel the market and have an impact on other stocks. Secondly, I think people are thinking the war will eventually be over. And while we don't know when it's be over, they think it's in sight. And therefore, I think that'll fuel the equity markets, and it's fueling it right now. The bond markets, I think, have been hurt in part because people recognize we still have a lot of debt in the United States, staggering amount of federal debt, and that there's no real easy way to get around that debt in the near term. Secondly, I think people believe that it will be very difficult for the Federal Reserve under its new leader, who's chairman is a very talented person, very difficult to lower interest rates in the near term.
So what's Kevin Warsh, what's he going to do? And how does he build unity among the other 11 members on the FOMC if he's going to be in 1 year get advice from the White House, cut rates, whereas the bond market and other stresses that we're going to get a fresh reading on inflation coming Thursday, it's climbing towards 4%, and that may actually indicate a need for a hike.
Well, the president said at the swearing in that he wanted an independent Fed, and I think that was a signal that he recognizes that lowering interest rates in the near term is probably not likely. I think the Fed has a friend in the White House in the sense that Kevin Warsh is close to the president, obviously closer than Jay Powell, and I think that president is going to make it a little bit easier for him than they did for Jay Powell, in my view. I think Kevin Warsh is a very smart person. He recognizes that the numbers, if they come in as high as people expect, it'll be very difficult to lower interest rates. The Fed futures market is anticipating 2 rate cuts in the not too distant future, rate increases in the not too distant future. So probably 25 basis points each time. And that's what the markets are assuming.
That might not sit well with Mr. Trump in the White House. How much are you concerned by Fed independence now that we've gone to Mr. Warsh?
Everybody wants Fed independence. I think the president said he wanted it. But I think recognizing that the war situation is unusual and that Kevin Warsh needs a little time to get his feet on the ground before he can begin to do what he wants to do, which is lower interest rates. He also wants to shrink the Fed balance sheet, and that will take some time to do as well.
Is he going to be able to get consensus on that? Because we're going to have a guest later, the former Chicago Fed president for 16 years, who says that's not the way to go.
Well, there are some members of the Fed board now who are saying that they don't think we should lower it. I think one of the board members the other day said they didn't think it could be decreased right now, the balance sheet. But we'll see what happens. In the end, I think the war will determine a lot. If the war is over, it'll make things better. If war goes on for a long time, I think it's going to be more difficult to lower interest rates and to shrink the balance sheet.
You wrote the book, How to Invest. How do you invest in this turbulent times when we don't know if the Fed is going to go left or they're going to go right, and we don't know necessarily the inflationary outlook? How do you invest in this? I know you don't have executive power necessarily at the Carlyle Group anymore, but where would you want to be looking for opportunities?
Well, we have to not try to make outsized returns. If you're trying to get 20%, 30% rates of return, you're probably going to be disappointed. The most important thing is invest with people that know what they're doing, have a track record, charge reasonable fees, give you transparency, and have a realistic expectation of the rate of return you want. And I think a realistic expectation for a rate of return for blended is probably somewhere in the high single digit, low double digits. If you can get 10% average on overall on your investments, that's very good. If you're going into the alternative space, private equity or the private equity equivalents, you should probably get something in the mid-teens. But something in between 10%, 15% with a blended rate of return, with a blended portfolio is very good. Don't try to get 20, 30, and 40% rates of return, because most people are not going to get that. They're going to lose money if they do that.
You like Mag 7? Do you like the AI play as it stands right now? Of course, a lot of the infrastructure speculation, whether data centers and AI is a good investment right now. What's your outlook on that?
I wish I were an investor at a very low price in OpenAI and Anthropic, because I think they're going to have very good IPOs. But whether those markets and those prices will continue going up as much as they have, I don't know. I think there's going to be a lot of people probably when they can sell their shares will probably sell the shares, be my guess. I don't know if a lot of people are buying OpenAI at the IPO, going to hold on forever, but I don't really know. But I think the prices are fairly full right now.
What is your outlook for AI as its impact on the economy and on jobs? Everyone's weighing in on it right now. Iqbal Khan of UBS was saying there are going to be ramifications on jobs, even though of course, they want higher productivity from it. Jamie Dimon was out saying, similar thing, that he wants to hire more people who are AI experts than maybe traditional investment bankers. What's it going to do to jobs?
Whenever a new technology comes along, people get nervous that it will infect jobs, and adversely so. But in the end, when the Industrial Revolution came, when the Internet Revolution came, when other things came, they did unemploy some people, but they employed even more people. So in the end, human ingenuity is such that I think humans will figure out how to redeploy their talents, and I think in the end it'll be good for society, but there may be a difficult transition period.
Yeah. What is your outlook for private credit? Obviously, Carlyle's involved with private credit. We know there were a couple of high-profile cases, Tricolor and First Brands last year. Going forward with the widening spreads and the higher yields right now with this bond shock that we're seeing, what is the future of private credit?
Well, for people buying private credit now or investing in it, I think they're going to do reasonably well because the rates are higher. The default rates on private credit are not all that significant. They're relatively about what they are in other types of credit markets. If we go into a recession, then all credit instruments are going to have some challenge. In other words, we haven't had a recession in the United States for more than 10 years. And so if you go into recession, there's going to be a lot of economic challenges. But short of a recession, I don't think there's a big problem in private credit or other debt instruments at the moment.
How does all of the things we've just talked about factor into the midterms?
I think the conventional wisdom is that a president will lose in the midterms. On average, they lose about 25 seats. On the first midterm, and his first term, President Trump lost 41 seats, I believe it was. Barack Obama lost 60-some seats. Bill Clinton lost 50-some seats. So presidents tend to lose seats. Very rarely do you gain seats. I think at the moment, given the war going on and high inflation, I think the president and his people would be thrilled if they could just keep it even. But I don't think they expect to win the House or have a bigger margin in the House. There'll probably be some losses for the Republicans in the House, but probably not as big as people once thought.
Is the war going to be his undoing in the midterms?
The war will be a factor. The war is not that popular, but I suspect the war will probably be over by the midterms, and therefore it won't be as big a factor then.
You and I are baseball fans. You're the owner of the Baltimore Orioles. So do you agree with expansion and do you agree with the salary cap? I'm tired of seeing the LA Dodgers win the World Series every year. Small market teams like my Mariners need to have a fair playing field.
The Mariners are an excellent team with an excellent owner, and they're the only team that's never been in the World Series. I hope someday they get there, but not before the Orioles.
Salary cap?
I will let the commissioner deal with that.
Okay.